Investors and traders, welcome to the channel Market Chart Pattern. Today is 11th of June 2023. It's a Sunday, and I hope everyone is having a good weekend break. In this video segment, we will be taking a look at the key US technology stocks that we have been following for quite a long time, as our long-term subscribers will know. So thank you for watching the channel. And for the new subscribers, welcome to the channel. This video is for educational purposes only, and it is not a financial advice. So guys, we're going to start by taking a look at the AI powerhouse stock, NVIDIA. So NVIDIA has been actually in a rally mode for the pretty much since the beginning of this year, and it had fantastic earnings come out, and we have seen a huge gap up. In fact, we had done a video about NVIDIA just, I believe, a day before the earnings were coming out, and we were looking at some key levels, and I think what we were looking at, in fact, did pan out exactly like that. I'll try to put a link to that video. It's an older video, maybe a few weeks ago. Now, what we are looking at is actually a very important pattern formation in the NVIDIA stock. NVIDIA has reached a level of about, roughly speaking, $420 per share level, which is a very important level. And we will be looking at the daily chart, then we'll be looking at the weekly chart, and we'll also briefly look at the monthly chart as well for NVIDIA to get a bigger picture of what patterns are telling us. So this $420 per share level is actually a 1.272 Fibonacci expansion. That actually comes out to be about $411 per share level, but we have another pattern formation which we'll take a look on the weekly chart. So that's why this is a level we need to pay attention to, because quite often the rallies actually they go up to 1.272 Fibonacci expansion and encounter resistance, and there is a pullback, and in some cases even the move actually terminates. So let's take a look at the weekly chart. So this is the weekly chart, and here there are two things that I would like to draw your attention to. So here $420 per share level is likely to be a pretty strong resistance level in NVIDIA stock. The reason is that we have a confluence of two things coming together. If you have been following our channel for quite some time, you will know that we really like to take a look at the one-to-one projections, which we like to call the ABCD pattern. So we have a completion of an ABCD pattern. In fact, this goes back to pretty much around December of 2018. And we also have this 1.272 Fibonacci expansion of this BC swing coming in a close confluence level. So we have two levels coming together. That's why we need to pay a really good attention to this level of, roughly speaking, $420 per share level, which is likely to provide a strong resistance level. Now, if, let's say, for example, what we have already seen is over the last couple of weeks, the stock has kind of consolidated and pulled back a little bit from this level. And it's also possible that, maybe this consolidation, in fact, could turn into a little bit of a larger pullback to begin with, and then we'll have to see how the market is going to behave. Also, one of the things from a fundamental perspective is that NVIDIA stock has the chips are made, per my knowledge, in Taiwan, and if there is going to be any geopolitical resistance or developments coming through, that is quite likely to impact the stock quite significantly. So that's one of the things that we need to, from a fundamental perspective, just keep in mind. And there are really clever participants in the marketplace, and the price action is actually likely to tell us and give us quite a lot of information. Of course, it's going to be price related, but what it means is that more informed people in the marketplace, perhaps they might know something, and that could maybe perhaps get reflected in the stock price. Okay, so guys, this is so if there is, let's say, a pullback which might come in, then just doing a 38.2% Fibonacci retracement, we're looking at approximately $300 per share level, which could be kind of the spot to look at. Now, from a momentum perspective, look, the stock is very strong. This is the blue line is the 20 week moving average, and the gray line is the 200 week moving average. So the blue line is on top of the gray line, and the price is of course on top of all of these. So it's pretty strong momentum. Let's closely take a look at quickly, excuse me, on the weekly chart. So look, the month of May was a huge month for this stock, and if June turns out to be an inside bar, meaning that an inside month where it's not able to take the price out to the upside, and there is able to take the price to the downside by just consolidates here, wouldn't be too much of a surprise after having such a large move. And also the critical levels that we looked at, this pattern formation of $420 per share level, this is something that we really need to watch. Now let's move to Netflix. So guys, this is the stock of Netflix. This is a stock which we have been following for a number of weeks, months now, and here it is approaching a really key level, which we think is around $490 per share level. Actually, uh, let me write it down: 490 per share level. Let me actually make it like with a question mark. So this is the one which we are watching for in terms of our pattern formation. The stock has had a really nice rally of the 38.2% Fibonacci retracement. So this shows strength in the stock because it was only able to pull back to just 38.2% Fibonacci retracement. And the likelihood is that it's in fact moving in this ABCD formation higher. It was also able to take the 38.2% Fibonacci retracement resistance level from the all-time highs reached here to the lows going back to May of 2022. So it looks like the stock has strength in it, and maybe $490 per share level is going to be the next level to watch for this. However, the stock is actually also approaching its 50% retracement on a daily chart. And here, just from a momentum perspective, the momentum does seem to be a little bit weak because the 20-week moving average is below the 200-week moving average. And what we also have is, although the price is a little bit above the 200-week moving average, it needs to gain a little bit more strength from a momentum perspective. And just quickly looking at the monthly chart, so here we go. It's a nice move up higher, and the ABCD pattern could actually take it up to $490 per share level. That's what we looked at on this daily chart right here. Now let's take a look at Meta, formerly known as Facebook. So the Facebook is actually also at a very critical level because the stock has rallied to the 61.8% Fibonacci retracement of the all-time highs reached to the lows, which were the 78.6% Fibonacci retracement from the lows since the IPO in 2012 to the all-time high reached. We'll just show that on the monthly chart, and just doing this, maybe there is an ABCD pattern there as well. So guys, there we go. It's actually at a very critical level. The Meta stock is in fact at a very critical level because we have two things coming together. We have the 61.8% Fibonacci retracement, and we also have the ABCD formation. So let me actually write this here as if this is going to be point X, then what we have here is E, then that's gonna be the B, that's gonna be our C point here, and where we are now is actually point Z. There we go. So we need to really watch this level very carefully because it could be a pretty strong resistance level. In fact, over the course of quite a few days, we can see that This level has actually to the dot, the ABCD pattern has provided a resistance so far, and the stock has actually pulled back. So we need to pay really close attention to this one. Let's take a look at on the weekly chart. So here we can see it's approaching 61.8% Fibonacci retracement, then ABCD pattern one-to-one projection right here. From a momentum perspective, again, you can see that this is the 200-week moving average, which is actually above the 20. So the momentum is needs to get us better. It's not there yet. So this is what we are watching in the Meta stock. We'll just quickly take a look at now Apple. So the Apple stock is something that we have been watching for a long time. It has reached our targets of $175 per share level, and in fact gone above that. So I'm just going to move to the weekly chart to show something which is easier to show you. So here what we are looking at is basically a trading range, and the stock is actually, you know, touching the upper part of the trading range. Whether it's going to be a breakout or not, most breakouts on their first attempt actually fail, and then the instrument or the stock or whatever it is pulls back into the range, and then makes another attempt on it. From a momentum perspective, it's pretty strong. 20-week moving average is above 200, and the price is above both of them, so that's really good. What is really key about this stock is that $122 per share level is a very critical support level. As long as it remains above that, the stock is really good. It's positive in our opinion. So here we are looking at the monthly chart. If let's say, for example, it's able to break out of this range of $182 per share level, well, then we have a further targets of roughly $200 per share level, and then also $220 per share level. Well, something that I would want to really show you guys is that $122 per share level was in fact a 38.2% Fibonacci retracement of the 2016 lows. If you guys are interested in looking at longer term pattern formation for the Apple stock, I had done a video about it. I'll try to post a link to it, and that goes through longer term pattern formation, and also for Microsoft as well. While we are here, let's also take a look at Microsoft. So Microsoft, very strong, as long as this $215 per share level is held, because that's 38.2% Fibonacci retracement going back all the way to the March of 2009. What the stock has done is, in fact, it's just come back, retraced about 38% of this entire bull run, and then now what it is doing is going and actually challenging the highs one more time, and we'll have to see whether it's going to be a double top or whether it's just going to be a breakout to the upside. If in fact it is a breakout, which the chances are that in fact it might be a breakout, but it's not going to happen very soon. Maybe there's going to be some resistance, the stock pulls back into the range, then makes an attempt higher. Then we have $385 per share level, and then we also have $430 per share level as the next level to be looked at, because that's just going to be the 1.272 Fibonacci expansion and 1.618 expansion of this entire move lower, which took the stock from its all-time highs of about $330 per share level to right down to the test of the 38.2% Fibonacci retracement around $210 per share level of the 2009 lows. So guys, we're not going to have the time to actually go through the number of stocks we normally look at, because the video is getting quite long. So I am actually going to cut it short here. I think we have looked at the key stocks we look at, and thank you very much for watching the videos, and have a great weekend. Good luck and good trading.